Hello and welcome to Virtual Investors Conference. On behalf of OTC Markets and Independent Trading Group, we're very pleased you have joined us for the Blockchain and Digital Assets Conference. The next live presentation is from Matador Technologies. Please note you can submit questions in the presenter box to the left of the slides. You can also view a company's availability for one-on-one meetings through Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Devin Soni, Chairman and CEO of Matador Technologies, which trades on the OTCQB venture market under the symbol MATAF and on the TSXV as MATA. Welcome, Devin.
Thanks, Anna, and really happy to be here. As you mentioned, my name is Devin Soni, and I'm the CEO of Matador. Matador is a Bitcoin ecosystem company, and I'd like to share a little bit about our history, kind of what we're building, and kind of where I think we're going over the next few years. So, what is a Bitcoin ecosystem company? I think there's a whole lot of Bitcoin treasury companies out there, MicroStrategy, et cetera. But what we do is we certainly have a Bitcoin treasury at Matador, but in addition to that, we also build on top of the Bitcoin blockchain. We build products and services. We additionally have a balance sheet with zero debt. We have a 25% stake in a Bitcoin treasury company based in India, which I'll add some color into. And we have what we think are some of the best institutional investors in the space, which I'll also get into. Overall, our goal over the next several years is to build our company into one of the leading Bitcoin ecosystem players in the world, with products, with services, and with a large treasury. Well, since this is a digital asset conference, I won't spend too much time on what Bitcoin is, but I do want to just communicate one of the really interesting trends that we're seeing in the market today, which is that historically over the past 15 years or so, Bitcoin whales or individuals had really been the mover of markets in Bitcoin and price. However, that's really changing over the last year or so, where we're seeing a whole lot more treasury companies, governments, ETFs moving the needle in terms of Bitcoin. So if you think about, today, publicly traded companies own nearly 800,000 Bitcoin. And that compares, extremely interestingly to the 160,000 Bitcoin being mined every year. As well as when you think about the demand and velocity by which these public companies are acquiring Bitcoin, we think these companies like ours are the biggest movers and the most interesting kind of part of the Bitcoin sort of community today, alongside ETFs. When we talk about building on top of Bitcoin, historically, I think people have really looked at Bitcoin as something that is a token. It's something that's a store of value that you hodl or you bury in the ground and don't do anything with. And you compare that to a cryptocurrency or a digital asset like Ethereum, which people see as a network or computing platform where you can build things on top of. Well, one of the really interesting things that is changing that we're taking a big bet on at Matador is that Bitcoin will also become a network of commerce, a network of trade, a network of assetization. So if you think about Ethereum today, it's a $300 billion market cap ecosystem, but there's $180 billion of stuff on top of it. A whole lot of that are stable digital assets like tokenized dollars and tokenized gold and tokenized other things, treasuries, et cetera. We have a really strong conviction that a lot of those things are moving onto the Bitcoin ecosystem. It's one of those things that we see as kind of slowly and then quickly and then all at once. Today, Bitcoin, despite being a $2 trillion ecosystem, has about $6 billion of stuff on top of it. And we think this trend is going to reverse and change very, very quickly. And the really interesting part of that is, if you had looked at, investing in something like Ethereum back in 2016 or 2017, that was really kind of, growing as an asset platform, you would have done quite well. You probably would have made, 5 or 10 times your money between then and now. However, if you look at the assets built on top of Ethereum, those are often up, 50,000, 15,000%. And we think that while we all kind of expect Bitcoin to grow as it becomes a more important asset globally, we do think and expect that the assets on top of Bitcoin will grow more quickly. And that is an area where we are spending a whole lot of time as a company. So we think that Bitcoin, again, is evolving from that store value asset into a real network for commerce that drives decentralized finance, that drives assets. And that's one of the things that we're building internally as well. We're actually building the future, not just kind of watching it happen. And one of the other really interesting kind of areas here is that we can sort of combine our two strategies. So if we think about our Bitcoin balance sheet today, it's about 64 Bitcoin, growing very quickly. Our stated goal is to get to 1,000 Bitcoin, about $100 million USD in today's terms, over the next kind of year or so. And from there, that makes us the top 20 odd kind of Bitcoin holder globally when we think about public companies. But on top of that, we want to use that Bitcoin and use the Bitcoin network to build things. Our first product that we're building is a digital gold product. It's a product that sits on top of the Bitcoin network. Users can hold in their Bitcoin wallets. Users can trade with their Bitcoin, but also actually kind of trade, uses a second store of value. And instead of building out another network, we chose Bitcoin because of the fact that it has existing 250 plus million users growing very, very quickly. So we're building products that already have an audience of hundreds of millions of users that are starving for new assets. And we expect that product to launch here in the next quarter. And then from there, we expect to launch other products on top of the Bitcoin blockchain, things like a silver product, things like other assets that we touched on previously. And I think as that market grows and evolves, as globally Bitcoin becomes both a network of commerce and a store of value, that we think that these things are going to grow much more quickly than the rest of the blockchain ecosystem. One of the really interesting things that we've done very recently that we just announced is an investment in a company called HODL Systems. HODL Systems is a digital asset company or a asset treasury company based in India. India is a really, really unique market for Bitcoin. And I think the best way to really describe it is to combine it, compare it to another very interesting market, which is Japan. So both India and Japan have what I'd probably call a different tax system for digital assets versus securities. So in India, Bitcoin and other digital assets are taxed at 30% versus 15% for securities. There's also a 1% tax on transactions. And much like the US and much like Japan for many years, it's actually sort of in many ways sort of a frowned upon asset at the regulatory level. People get kind of bank accounts shut down. Very recently, there's a high-profile Supreme Court case which legalized Bitcoin, despite the regulatory bodies in India wanting to sort of suppress it. And because of that, we think that there's significant demand in the Indian market for Bitcoin and a Bitcoin product, but not a very great way to hold it. And when you think about the size of the Indian market, it's quite interesting as well. It's you look at 200 million nearly brokerage accounts in India, significantly more than the United States. The number of brokerage accounts in India is growing by 3.4 million a month. And it's a young population that's very tech savvy who already believe in store of value assets like gold. So we think that Bitcoin is quite primed to make a significant coming out party in India over the next several years. And we expect that Bitcoin treasury companies and digital asset treasury companies like HODL Systems, which we now own 25% of, will be a very, very large beneficiary of that. Another part of the interesting part of HODL Systems is that the products and assets that we're building on top of the Indian ecosystem, and on top of the Bitcoin ecosystem, like digital gold, like digital silver, et cetera, will also be licensed by HODL for launch in the Indian market, which is obviously a $1.4 billion person economy with hundreds of millions of consumers that are ready to buy products like this. There's more Indian gold held by Indian women than the US government, as an example. So I think when we see both the Bitcoin side and the gold side that we're building out, we expect HODL to be a very, very big part of our future. I'll spend a little bit of time talking about our management team here. In terms of myself, I grew up in San Francisco, started my career as an investment banker at a firm called Lazard, helping companies like Google and Amazon and Microsoft buy strategic acquisitions. Eventually moved to Goldman Sachs, where I was an investor in technology companies and fintech companies. From there, really fell into the digital asset world. Bought my first Bitcoin in kind of late 2012, early 2013, and started a project in the digital asset space called Polymath back in 2017, whose stated goal was to tokenize assets on the blockchain. From there, I was one of the co-founders of the first Bitcoin, or sorry, the first sort of digital asset treasury company called tokens.com. We raised $75 million to buy Ethereum and Solana and Polkadot and assets like that and generate yield from them. So I spent several years as COO and CIO of that business and helped start Matador back in 2022. My co-founder in Polymath and tokens.com, Trevor Kaverko, is also one of the co-founders of Matador. Additionally, Sunny Ray is our president. Sunny has a long history in Bitcoin, got involved in the space in 2011, helped start the first Bitcoin exchange in India called UnoCoin, which is still doing quite well with investors including Tim Draper, Barry Silbert, et cetera. From there, he ran global business development at Kraken, the third largest cryptocurrency exchange in the world, and now is president. In addition, we've got Mark Moss as our Chief Visionary Officer. He's also a partner at the Bitcoin Opportunities Fund, which is one of the largest kind of Bitcoin-focused funds in the world. As well as Donato Sfera, an experienced kind of capital markets investment banker, one of the co-founders of companies, several other companies in the digital asset space. So we've got a pretty stacked team with both capital markets experience and core Bitcoin experience, which I think is quite rare in these kind of Bitcoin treasury companies. When we think about our advisory board, do want to point out a handful of people. So Tyler Evans, who is the CEO of UTXO Management, which is one of the largest Bitcoin funds in the world, is on our board of directors. They're one of the largest investors in our company. David Bailey, who runs BTC Inc., which is the company that runs the National Bitcoin Conference, runs Bitcoin Magazine, one of the largest, most active kind of social media accounts in the Bitcoin community since I think about 2010 or so. Dave's on our advisory board. He's the part of the group that brought the Trump administration into Bitcoin, and they're on the board of several other companies and incubated companies, including Metaplanet and many others. Additionally, we've got Brad Mills on the board. Advisory board rather. Brad is an old kind of a native Bitcoiner based in Canada, who's been a Bitcoin miner and sort of enthusiast and influencer for the past decade or so. And beyond that, I think we've got a wide range of core investors that have done kind of wonderful things in the space. So I touched on UTXO, which is our largest institutional investor. Kitco, which is a large media company in the precious metals and Bitcoin space, with 6+ million monthly active unique users, is an investor in the company. We are also partners with Bitcoin for Corporations, which is Strategy and UTXO, or Strategy and Bitcoin Inc.'s lobbying effort for Bitcoin companies and Bitcoin treasury companies. So we were one of the first 10 members of that and continue to have a really strong relationship there as well. Some details about the company. We've got about $18 million of NAV, net assets. The majority of that is Bitcoin. We expect to expand our Bitcoin holdings significantly. We just closed a private placement a few days ago, which we'll be deploying to Bitcoin here over the next couple of weeks. As mentioned before, our stated goal here is to get to about 1,000 Bitcoin in 2026, and for scale from there. And lastly, I'll just kind of point out a few kind of I think key highlights and milestones, and just kind of summarize those. So number one, we are a Bitcoin treasury company. We expect to keep the vast majority of our balance sheet in Bitcoin and Bitcoin-like assets, except for sort of the day-to-day funding required to kind of run operations. We build assets on top of the Bitcoin network, including our launch product launching this month, which is the digital gold product on top of Bitcoin. We've got what we think are the best investors in the space, including UTXO, Bitcoin Opportunities Fund, Arrington Capital, who I've mentioned before, as well as several other top institutional investors. Strong visibility and vision into launching kind of onto more senior exchanges in the near future, to kind of increase our profile for bringing on more strategic and kind of financial and structured capital. So with that, I will close the presentation. You can contact me at devin@matador.network, or our president, Sunny Ray, at sunny@matador.network. And with that, I will jump into the Q&A. So with these Q&A questions, I will basically read the question, provide a response, and then move on to the next question. So first question is, why do we trade at a higher MNAV than other companies? So MNAV is a metric that many Bitcoin treasury companies use to describe their market cap relative to their Bitcoin holdings. So we trade at an MNAV of roughly 7.6. This is probably a little bit higher than companies like MicroStrategy, which are a little more mature, probably in line with some more growth style Bitcoin treasury companies. The reason why we think we traded a higher MNAV, or I think we traded a higher MNAV, is a few reasons. One is we're growing quite quickly. We have very recently made an investment into this Indian company, which I don't think is fully reflected on our balance sheet. As that company grows, we own 25% of that business, and we think that companies like that with a whole lot of these structural kind of opportunities often do trade at higher MNAV. So if you think about companies like Metaplanet, which traded at significantly, a pretty, high MNAV relative to companies like MicroStrategy, I think we're getting credit for those types of things. And secondly, we do build a business that generates Bitcoin natively. I'll get into the business model in a moment, but because we'll earn Bitcoin without raising capital in a non-dilutive manner, I think that's kind of one of the reasons as well that the market is giving us credit for a higher MNAV than some other companies. The next question is, are there any plans to list on a more senior exchange, possibly in the US? So absolutely. I think if you've seen the capital inflows into Bitcoin treasury companies, the majority of ones that have had the most success are on senior exchanges like the NASDAQ. Our intent really is to explore this as deeply as possible and find the most efficient way to get the access to capital that those companies have. So it's certainly something that's on our radar, very, very high on our list for the following kind of several months. Question on our recent investment in India and why it could be the next Metaplanet. Well, I touched on that briefly, which is basically that there's a whole lot of structural reasons why people in India may choose to invest in a Bitcoin treasury company more so than investing in in traditional Bitcoin in India. One is the fact that it is kind of looked in a scrutinizing light, especially for large institutions, large family offices that may want to get exposure to Bitcoin. There's a whole lot of capital controls. I think individuals are limited to buying $250,000 or withdrawing $250,000 a year outside of India, and that includes buying digital assets like Bitcoin. So if anyone that wants more exposure to that would have to use a treasury company like HODL Systems. Secondly, I think there is a strong benefit to being able to buy assets on your mobile phone, trade on your mobile phone with the hundreds of millions of broker accounts in India. So I think that's one of the reasons it's similar to Metaplanet, where it's a whole lot easier, and also with the tax regime, it's a whole lot more favorable. So we do expect that that company will have significant capital inflows from retail and institutional investors in India, as well as globally, like Metaplanet has. So if you think about Metaplanet's example, they went public in April, or they launched their Bitcoin strategy in April of last year when they're sitting at about a $10 million valuation. Today, they're at about a $5 billion valuation. We entered into this investment in the India opportunity at roughly a little over a $6 million pre-money valuation. We do expect that to change quite quickly as more capital flows into that business. So it's a wonderful question. Next question would be, what is the strategy to scale India gold and the Russian BRICS gold market? So there, one of the things that we think makes a whole lot of sense with our gold business is to license it to various jurisdictions. Building the technology is something that we're very good at. We know the Bitcoin blockchain extremely well. We know how to build assets on top of the Bitcoin blockchain. We know the regulatory environment and the consumer environment in North America, which I'd call kind of Canada and the US. We have a whole lot less visibility and a whole lot less feet on the street in markets like India and certainly other BRICS, which are very, very focused on gold as a strategic reserve. So I think our intent here will be to explore additional licensing deals where we can actually provide the technology and the framework, but have those kind of licensees provide the regulatory view and the regulatory line of sight, as well as the kind of end customer line of sight. So I think that's really the way we'll see that model scale. And with that, I'll take another question here, which is, what is our revenue model and how is the company capitalized? So I'll kind of give maybe a little history of the company capitalization to date, and then walk into the revenue model. We launched the company in late 2021. We raised about $5 million Canadian in 2022 to kind of scale out the business and build out the team. Spent about 2 years working and building the technology platform that we're commercializing now. In summer of last year, as part of our kind of go public process, we raised another $11 million Canadian, 11.3, is the exact number. And that was through funds like UTXO, Bitcoin Opportunities Fund, and a couple of other groups. So we raised about $11 million then. Since then, we've done just 2 private placements here over the last few weeks, where we raised another $7.6 million. So in aggregate, we've raised about $23 or $24 million. The vast majority of that is earmarked to continue going to Bitcoin, and also to kind of grow that balance sheet. And we do expect to tap the capital markets when it makes sense in various ways to continue to build the Bitcoin balance sheet. When we talk about our revenue model, so we launch products on top of the Bitcoin blockchain. So when we talk about our digital gold product, for example, we buy physical gold, store it at the Royal Canadian Mint through a partnership with Kitco. We buy that gold, for lack of a better term, wholesale. We sell it, to users, in Bitcoin. So we earn Bitcoin for selling that product. We earn a margin on that Bitcoin. Additionally, as those units trade hands, those gold units kind of trade hands, we earn a percentage of the transaction fees. So if the transaction fee were, for example, 1.5% on $100 or $1.50 on a trade, we would earn roughly 50% of that. So 70%, 75 cents, that would be paid to us in Bitcoin. And then thirdly, as mentioned, there is an exploration around a licensing deal to license that gold product to markets like India, where we would earn licensing fees based on the revenue and success of those offerings. So we are a pretty light team. We've got less than 10 people on the team today. We expect to keep it pretty lean. We do see ourselves more like a royalty or IP business that also has a very strong balance sheet in Bitcoin. Next question. How will physical metals be held, and will other metals be offered as ordinals, and can they be traded like NFTs? So physical metals will be held through various registered custodians. Today, our physical gold is held at the Royal Canadian Mint, and silver and things like that will likely be held through similar custodians. We have the ability with our platform to hold at any sort of registered custodian that has sort of an API access to their holdings. We do like buying and selling programmatically, which just gives us more flexibility to manage our balance sheet. So what we do always hold at qualified custodians. As that business scales, we will be showing our holdings in real time, so people can sort of see the specific holdings we have of those metals that back kind of the assets that we're kind of launching. Another question here, which is, are there ways you're thinking about monetizing the Bitcoin on your balance sheet, and what types of return could those yield? And would that allow Matador to be cash flow positive? So great question. I think we've seen other companies do this to great success. If you think about a company like Metaplanet that generated positive net income last year, really just based on their yield generation strategies, we do think that there is a lot of value in monetizing the assets on our balance sheet. I think we would look at doing so in an extremely conservative manner, with a whole lot of security and a whole lot of protocols of finding the right partners and finding the right counterparties. Ideally, we would do so in a self-custodial manner. When you think about the gamut of kind of Bitcoin yield, it probably runs from 3 or 4% a year for something that is self-custodial based on decentralized platforms. 10 to 12% a year for quite safe sort of volatility mining is what it's often called, which is structured products based on top of Bitcoin. And then up to 20 to 30% a year for more aggressive structured products and decentralized finance. I think we would probably not be really spending a lot of time on that right side of the bucket, which introduces a whole lot of risk, including smart contract risk. Instead, we'd focus on leveraging the balance sheet in ways that provide extremely low risk opportunities to generate yield, but because we do have a small team, because we do expect to accumulate more Bitcoin, we do expect that the dollars generated from kind of our Bitcoin holdings will help us get to cash flow positivity alongside our core business operations. What's the rationale for pricing recent financings at a steep discount in the money with warrants, were less dilutive alternatives considered? So I think when we, it's an interesting question, and the way we priced that private placement was based on the pricing of the stock at a time where it sort of ran up significantly after the pricing of the round. So it, based on some of the news, based on the market. So while we priced it, we locked the pricing, we accepted subscriptions. It was done at a slight discount to the market rate at that time to account for the fact that private placements do have a 4-month lockup. So we did it at a, roughly, I believe, a 20% discount to our weighted average price, which is pretty normal for the 20% for the 4-month lockup. The warrant was done at a sort of significant 50% premium. However, at the time afterwards, our stock did run a bit. So I think between sort of settlement and commitment and close, there was a bit of a run. So I think that would probably be the reasoning. We continue to look at several financing options in various ways. I'd call them, two sides. One are equity financing, the other are kind of structured products, both with the prime intent of buying Bitcoin. So I think we'll continue to look at these options and, kind of scaling the right way to bring in capital into business in the least dilutive way possible. The next question is, can you provide a bit more color on what is meant by digital gold and details on the product, ETF, et cetera? Bitcoin is also considered digital gold. Great question. So, I think, let me actually scale to a slide. But at a really high level, what we're building is taking a unit of Bitcoin, which is called a Satoshi, which is the smallest unit of Bitcoin, embedding that Bitcoin Satoshi with a unique gold collectible, I think is the best way to put it. So if you think about gold coins, they have value that's based in gold, but they also have value that's based in a collectible. It could be a limited edition, Panda or Queen Elizabeth or whatever, Buffalo, gold coin. Those are often sold in limited runs. Typically, the downside value of those is, hey, you mount your gold and you got some gold, and the upside case is, hey, there's some uniqueness to this piece because it's rare. We want to kind of create that same spirit of collectability with our gold product. So what we do is we take a unique piece of gold art, embed it onto a Satoshi, let people hold that Satoshi that's embedded with that gold art on their Bitcoin wallets. So what can they do with it once they have it? They can hold it as a collectible or store value. They can sell it to another user. They can the third thing they can do is send it to Matador for a sort of a piece of gold with that specific piece of art printed on it. So think about it like art with gold as a medium, like a gold coin or something like that. So what it really does is create this kind of store of value mechanic. What we kind of like to say is it's making kind of gold great again. So if you think about young people, especially where we kind of envision this product, lots of interest in NFTs, lots of interest in meme stocks, maybe less interest in store value assets. So what we want to do is kind of create the fun and whimsy of kind of NFTs that people kind of gravitate towards, but do so with a store of value kind of backing, which I think makes them kind of more fun and engaging. So digital gold in the sense is really a digital piece of art printed on gold. So Bitcoin can be considered digital gold, but when we say digital gold here, we actually mean real gold, like 24 karat. Last question we've got is, how correlated do you expect Matador to trade versus Bitcoin and gold? What are the advantages of investing in Bitcoin or gold ETF? So it's a great question. I think there's a whole lot of ways for individuals and investors to get exposure to various assets. The ETFs have obviously proven extremely popular with billions and billions of dollars of capital flows. I think if you actually think about ETFs today, there's sort of 1.4 million BTC, or about 7% of all Bitcoin, is sitting in ETFs. So obviously a very, very popular way for people to participate in the space. They obviously are built to trade up and down with Bitcoin. I think for us, our business is purpose built to what I'd call accumulate Bitcoin faster than an ETF can accumulate Bitcoin. And I think with that in mind, what we do is we create products like our digital gold product, like our other products, with the express intent of not needing to raise more capital to grow our Bitcoin balance sheet. So I do think that if Bitcoin is up significantly or Bitcoin is down significantly, I think there will be obviously an impact to our price because a lot of our balance sheet is Bitcoin. However, I think the end result is our intent is to grow our Bitcoin balance sheet much more quickly than a Bitcoin ETF, which is part of the reason we may trade at a premium. On the gold side, I mean, I certainly think we do hold gold on our balance sheet. It's not, it's a few kilograms. It's not a giant material part of our balance sheet today. It's more used as what I'd call inventory. So I don't think we necessarily trade in line with the gold ETF, but I do think that as gold becomes more interesting and it's discussed in the common, people like talking about it or it's in the market, I do think that people will pay attention to our products and possibly our company as well. So I think that there is some connection there. So that was so for the last question. And with that, I think we're a little bit over time here as well. So I will wind down the Q&A and wind down the presentation. But thank you everyone for spending a few minutes listening to the story. As a reminder, you can visit us at matador.network. You can email me at devin@matador.network or our president, Sunny Ray at sunny@matador.network. And with that, thanks everyone so much for attending. Cheers.